Good day, Al. Ira Epstein with your evening update, and this particular update I'm recording at 5 p.m. Central Time, and it is Thursday, and we are now up to the 14th of July, 2022. So I'm looking at the markets. We're going to concentrate a little bit on the stock of the day. JP Morgan down about 391. You can see that right through here. Tesla had a bid, as did Amazon today, and Apple, impressive. Google, one that we'll put to the backside, down another $20. Now, another thing you want to keep your eye on is stocks. Sorry about that. Why do I want to do that? And by the way, you can trade right off our charting software, so you can see how easy that is. But why? Because Intel said they're going to raise chip prices 10 to 20%. So even though you've watched these markets come down, the fact that they can do that and that they're willing to do it says a lot. There's some pricing power here. Now, as I said, JP Morgan, if we take a look, this market's been in trouble for a while. This isn't brand new. This stock has been under pressure, and these are new lows that you're watching here, certainly since the month of February. You can see that on the chart. As we take a look at the chart breakout coming down, now when I looked at the earnings today, I was not disappointed at all with what they're making on their credit cards. You're going to lose some money in these markets because people get into trouble. I wasn't upset with how they're earning on the curve yield because the curve yield's been taking the front end up, if you will. The back end has been slipping a little bit. But they're still, and I understand, about $350 billion. They're still paying just about 0.9%, and they're certainly lending out at much higher than that. It's the loans, that the reserves that the government's making these companies put up. All of them are going to have losing quarters because they're putting away so much money for the reserves that if the recession is a hard landing, the banks have to be in good enough shape. Now, they don't lose those reserves, or whatever they don't lose of them. It's two-way street. That'll get put back into dividends as we come out of this. But right now you're at the beginning. I want to make that clear. You're at the beginning of where they're going to be putting away these reserves, and things are going to get worse before they get better for the economy, as the Fed is on a trajectory to do one thing: beat inflation. To beat it, it's got to take down demand. It's going to raise interest rates. That's never popular. Okay, but does it mean everything's going to fall apart? And I want to make that point in this update. No, you got a lot of markets that are now down low enough where you can get bounces out of them. When you take a look at where you're at on this, all you did is you fought a battle on a way back up after this big break against the 18-day average that has resolved itself to the downside at this point. Look where the market closed, though, near the highs of the day. So the market left the worst behind it, trying to stay and make a run, I think, over the next 2-3 days to get back in the Bollinger Bands, back over this lower band, if you will, in the market. You finished at 108 here. That number's 109.64. You can see it right there. Look for that to occur. What else? Well, you got down to the point where you're oversold. I teach in my charting course that any reading under 23 is actually any reading under 30 is oversold. We happen to be at 23.55. An oversold market that has stepped out of the lower Bollinger Band. Notice it closed in the top part, not the bottom part of the quadrant, and that tells me, if you will, that the market got a little bit overdone to the downside. In AMC, other people are picking up on what I am. I was reading, I think it was in Bloomberg or Reuters, I forgot which one, a full report on the debt service of AMC and what they have to do, and people seeing what I am. If they can't get out of harm's way while they've got a substantial amount of cash in the bank, the burnout rate after the summer is going to get rather severe, and you've got to be looking at that. I was looking for resistance to come up. And as you know that, I mentioned it just the other day, starting at the Bollinger Band, but certainly right up here at these moving average with it. Now, if somebody got on it, the old meme guys, when they bought off Reddit and everything, going crazy, 22.75. Do I see that? No. I see you overbought into a serious resistance point. I think the smart money took money off the table, came out. In Apple, we're embedding. So what's going on here? What does embedding mean first? Remember, embedding occurs, if you've taken my enhanced Bollinger Band course, when you get 1, 2, 3 days in a row over the 80 readings in the Bollinger Bands, which you have. You didn't lose it back. So this market, as I said, was most likely a break on pullbacks. I'm looking for the 148.45 level. I am not looking for it to be able to really run right through these numbers unscathed, but it seems to be an area the traders are parking money. A lot of traders have come out of a lot of stocks on this big break. You see that when you see the VIX. The VIX didn't today do what it should do. It did not take off to the upside, and that's a problem for the market. It means that you're not getting panic. You're not getting people that want to buy insurance. In Disney, I don't want to be short under Bollinger Bands. That's what I teach traders. Now, that's up to you, but I think it's a bad risk to be getting short down there, oversold. This is where pros are doing nothing. What do I mean by that? You're caught in the middle of no man's land in this narrow Bollinger Band. Again, think of wine bottle on your kitchen oven. It melts. There's still wine in it. It flattens out. So all that pressure is building. It's going to burst out of this cork one way or the other. It's tried the downside, unable to go through so far. So it probably gives you a bounce here. It doesn't mean it's going to go too far. The same exact pattern in XLF. I didn't think you'd go anywhere to the top side because of the upper band, and I don't think you're going to the downside right now. I look for these markets to hang in here. This is the exact pattern I've told you night after night that I don't like trading. Even the semiconductors, with the good news, you're caught in these narrow Bollinger Bands. You need something to happen here. Even with Intel giving us the idea what the semiconductors can do, people are reluctant to buy things. In a better time, they might say, oh, pricing power, let's go for it. They're not saying that. Then in the home builders, you're on the verge of losing the embedded reading if you don't stay up tomorrow. Even though you came back and you closed literally at the day's high, 58.03 to 57.96, well off the day's low of 56.85, you're slipping back in the readings. Do you see how this is going? If that happens, you'll go back to the 18-day average to regroup. It's a hard market to want to be long right here. In the energy sector, from my work, my perspective, this is a cover-all short day. The whole thing. Right there against the lower Bollinger Band. That combination with the 200-day average right through here, I wouldn't be surprised if you get a bounce out of this. In the gold market, now you've locked in a bearish embedded reading. You want to get into this market, but higher, way up into this area, not down here to go short. I'll be patient. If the market can come back, by the way, let me show you something so important here. You had an outside day up. If you have an outside day, my course, and if you hear my voice, it's getting stronger when I get back to recording my outside day course. One of the things that I'll be teaching is you make a run to try to get to the lower Bollinger Band or the nearest moving average. Well, it certainly made its run to try to do that. We'll see if it can hit it or not when it finishes up. You certainly did that right on the button, as you can see in GDX. This is not the place to be short anymore. Now you want to go to the sidelines and see if a rally ensues that you can do something with. Copper, very narrow range to try to trade anything. Bollinger Band support. It has developed just now the embedded reading. Watch. Day 1, 2, 3. Correct? And now you're trying to make that run to the lower Bollinger Band. AGG. I don't like that you're caught in this narrowness. I'd stay away from this. I just don't see anything that I like in there. Trend down, the bias up since you're over the 18-day average. To get bearish, I need to see a close under 101 right here, 101.19. And so far haven't gotten that. That would put it under the 18-day average. That's what's necessary. UUP. I told you that I thought all those people yesterday talking about the dollar could get themselves hurt a little bit here. You don't want to be picking a top. The market will tell you it's topped when you see the red line of the slow stochastic getting and going to close under 79. That's the key. Without that, the breaks in the market are still that. Buying breaks and no more. And in the euro, you have a fully embedded bearish reading. You took out the lows of an outside day up, if you take a look here. Or was it? Yep. That often leads to a challenge of the lower Bollinger Band. You negate that if you come back through 93.57, then you probably catch everybody all wrong-sided in the market. This is a good time to do what? To take your cursor, follow me, move yours like I am, and go to the Enhanced Bollinger Band course. That's what I want you to look at. Learn about it. This is all Bollinger Band talk I'm giving today. Learn how to work with them. I created a 13 video series, very inexpensive. It will teach you how to work with this, especially if you use our charting software or your own, because it's Bollinger Bands. My slow stochastics will be a little different than yours, but that's important because once you're a subscriber, just write me. I'll give you the right readings to put into your software if you're not using ours to do this. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.